Crypto stocks are crashing. Bullish down 6%, Robinhood down 6.5%. The entire sector is bleeding red as investors flee for the exits. And then there's Cathie Wood, legendary investor and queen of disruptive innovation, calmly writing checks for $37 million to buy more. In just one trading session, ARK Invest purchased $21 million of Bullish and $16 million of Robinhood shares, the same stocks everyone else was selling. Was this financial suicide or the calculated move of a master contrarian who has turned buying the dip into an art form? In the next 4 minutes, you'll discover why Cathie Wood's strategy of aggressive dip buying has generated billions in returns, how her $172 million Bullish purchase during its IPO debut paid off spectacularly, and what this latest move reveals about the future of crypto investing. Cathie Wood didn't become one of the world's most watched investors by following the crowd. Since launching ARK Invest in 2014, she's built a reputation for making massive bets on transformative technologies when others won't touch them. Tesla at $50. Zoom during the pandemic. Bitcoin companies when Wall Street called them too risky. Her flagship ARK Innovation ETF has delivered returns that most fund managers can only dream of, generating over 2,000% gains during its peak run. The secret? Buy revolutionary companies when they're cheap, especially when the market is panicking. On Tuesday, August 20th, that philosophy was on full display. While crypto-related stocks suffered a brutal sell-off, Coinbase down 5.82%, Galaxy Digital plummeting 10%, Strategy falling 7.43%. Wood saw opportunity where others saw disaster. Her target: 2 companies at the heart of the digital asset revolution. Bullish, the crypto exchange that had just completed one of the year's most spectacular IPOs, and Robinhood, the trading platform that democratized investing for millions of Americans. The numbers tell the story of calculated aggression. Through ARK Innovation ETF, Wood purchased 356,346 shares of Bullish at approximately $59.50 each. Total investment, $21.2 million. Simultaneously, she added 150,908 shares of Robinhood at around $107.50 per share, another $16.2 million deployed while the stock was in free fall. This wasn't Wood's first Bullish purchase. Just 1 week earlier, during the company's explosive New York Stock Exchange debut, ARK Invest had bought 2.53 million shares worth $172 million across 3 different ETFs. That purchase came as Bullish stock rocketed from its $37 IPO price to a peak of $118, an 84% gain in a single trading session. The Robinhood purchase also followed a pattern. ARK had been buying for 3 consecutive sessions, $14 million on Monday, $9 million on Friday, and now $16 million more as the stock hit new lows. Wood's buying spree reflects a broader transformation in how sophisticated investors view crypto-related stocks. While retail investors often panic during sell-offs, institutional players with long-term vision see these moments as gifts. Bullish represents a particularly compelling opportunity. Led by former New York Stock Exchange President Tom Farley, the platform has processed over $1.25 trillion in trading volume since launching in 2021. The company also owns CoinDesk, creating a unique combination of exchange operations and media influence in one publicly traded entity. The IPO had been massively oversubscribed, with demand more than 20 times the available shares. BlackRock and ARK together indicated interest in purchasing up to $200 million worth of shares, signaling institutional confidence in the crypto infrastructure space. Robinhood's appeal lies in its democratization of investing. The platform has introduced millions of Americans to stock and crypto trading, building a massive user base of young, tech-savvy investors. Despite regulatory challenges and market volatility, the company continues expanding its crypto offerings and international presence. Wood's purchases also came against the backdrop of broader crypto market maturation. Bitcoin recently hit new all-time highs above $124,000. Institutional adoption continues accelerating, and regulatory clarity in the United States is finally emerging. Cathie Wood's $37 million buying spree during Tuesday's crypto stock sell-off wasn't reckless speculation. It was textbook contrarian investing from one of the world's most successful growth investors. Be fearful when others are greedy, and greedy when others are fearful, Warren Buffett once said. Wood has built her entire investment philosophy around this principle, consistently buying innovative companies when sentiment is darkest and prices are most attractive. Her track record speaks for itself. The Circle purchase during its June YPO, those shares are now worth over $675 million. Early Tesla investments? Legendary returns that helped establish ARK as a powerhouse. Bitcoin-related stocks during various crypto winters, consistently profitable when markets recovered. For investors watching this unfold, Wood's strategy offers valuable lessons. Focus on revolutionary technology, buy during panic, and think in years, not months. As crypto and traditional finance continue converging, companies like Bullish and Robinhood sit at the center of a multi-trillion-dollar transformation. The market may be selling today, but Cathie Wood is betting that the future belongs to those brave enough to buy when others won't. History suggests she might be right, again.